Hello, Loren. Nice to see you. Hello, all those folks out here joining us today. I'm very excited to collaborate again with you, Loren. I don't even know what number this is, truthfully, of how many
We're in number 3 out of 6.
Well, no, we're going to talk about the series, but I'm talking about how many webinars you and I have done, from the get-go. So it must be, I think it's probably more than 12 to 15, how many conversations we've had in this forum. So it's nice to see you, Loren. Today is critical steps to raise your rates without losing clients. One of, I know, your favorite topics, and it's been an interesting topic at LeanLaw. I'm going to start by just going a little over some LeanLaw stuff, and then we'll get right into the conversation. So let me just pull up a slide really quick. I'm going to share my screen with the group. It's a little clumsy in this Zoom, and we'll say that here is today. We're doing critical steps in raising your rates. Today is May 5th. So happy Cinco de Mayo to everyone. This is part of a broader series that we have in our session called Raising Your Rates, which I will send out the list. Our last one was March 10th, which was Attract High Value Clients, Steps to Communicate Your Value. And our next session will be July 14th, 5 Steps to Win New Clients, even when you don't enjoy the sales part, which most folks don't do. If you're not familiar with LeanLaw, we are a timekeeping, reporting, and invoicing application that is built on top of QuickBooks Online. If you are a law firm or working with a law firm and you're interested in using QuickBooks Online for your accounting, LeanLaw is the obvious solution. And this is a relationship we have, Loren, to help bring smarts and community to our accounting folks. A few things to note about LeanLaw that are happening. We do have a monthly, here's the slide I want, a monthly masterclass with our CTO, Fred Willerup, and our head of success, Chase Sullivan. Last month was invoice workflow. Previous to that, there was expenses, but basically it's a drill down for an hour with 2 of our experts in the product to answer questions and show you how to maximize the value of LeanLaw and take those key learnings and bring them back into the clients that you work with. We also have a working lunch for our LeanLaw Accounting Pro community every week, where we bring together LeanLaw folks into this community to answer questions and have casual conversations, and again around that theme of collaboration, community, and education. So as I mentioned, this is our 3rd session of 6, and we just did that attracting high value customers. I will post the video recaps in the session or in the chat notes so people have access to it, and our next one will be July 14th. And Loren, that leads me to I'm going to do a poll before we get going, and my polls are bad today, but I'm going to do this first intro poll, which is 3 quick questions. So I'm going to ask the group to do a quick poll, just to kind of tell us a little bit about yourselves, and that poll is open, and it's kind of a 1, 2, 3. So if we ask the group just to engage and let us know a little bit about who's here. Okay, now I see some answers. And I'm going to close this in another 5 seconds. Okay, question closed. So, so most of you have some law firm clients, and some of you in our Accounting Pro program, and no one's using, this is interesting, this is unusual for this group, that no one's using, don't have clients using LeanLaw. And some of you have seen Laura before, and some of you haven't. So Loren, introduce yourself to the group. Let's get into the conversation.
Thank you, Jonathan. First of all, I just want to say welcome to everybody joining us. I appreciate you taking time from working in your business to joining us today. I view that as working on your business, being able to get those advanced insights. One tip that you can immediately implement from our conversation today. A little bit about me is I'm a sports psychologist turned business coach. What I have found is that my education gave me all the tools, the know-how to be able to do what I do really, really well. But it also prepared me to be an employee instead of an employer, business owner. Because of that, I found that there were 3 things that I had to figure out to have a business that I run instead of one that runs me. And that is how to communicate my value. That was the first thing. Being able to network effectively, especially when I'm more of an introvert than an extrovert, and how to message what I do so that people want to have further conversations with me. The second thing is how to be able to enroll high value clients when I don't really enjoy the sales part. So how do you have those conversations? What do you do? I don't want to pitch. So I had to figure out how to have what I call a value conversation. And then number 3 is how to price my services when I didn't want to trade dollars per hours, charging an hourly rate. Those are the 3 things that I find that accounting professionals that I work closely with could benefit from also is communicating value, enrolling new clients when they don't like the sales part, how to separate their fees from time so they're able to earn more. And another note is from 2018 to 2022, I have been listed as one of the top 22 business coaches on HubSpot. So that is a little bit about me.
Yeah, and I'll just echo that, you know, I think what your greatness is that you niche and understand this community so well, that is so, you have such an ability to have effective conversations with your constituents and really see and make change. And I, you know, she didn't ask me to do this, but I know of people in our accounting community that have worked with Loren and transformed not only their businesses, but their professional lives, which had such a huge impact in their personal lives. And when you get your business straightened out, it's much easier to get your personal life straightened out. And I can attest to that. So a quick poll. I know we're just like all in the polls here. Let's see if I can get this up without being so clumsy this time. This is your poll, Loren. So it is, let's see if I've got it there. So before we get into this pricing, I just wanted to query the group on this question, which is rate your pricing confidence, because we're going to talk a lot about pricing today. So if the group could answer this choice, we'll keep it open. And I can know that, like, it's interesting because, well, I don't want to sway the group. I'll make my comment in a second. And I'll keep this open for another few minutes and then we'll move on. Okay, so kind of a split, 50-50. Some are interested, some feel satisfied with their pricing, others have some some interaction. So Loren, take a step back for me. You know, I always ask this question, which is help the group understand where we're going relative to the content you've already presented in the first sessions, and how does this fit into the grander scheme here, please?
Well, Jonathan, first of all, you and I, we've been having these conversations for 3 years now. We're in year 3 of doing this, and we always choose a theme for the year. This year's theme is positioning, pricing, and profits by working with law firms. And all the different conversations that you and I are doing, they kind of stack on one on the other. You can either see one individually, or you can see all of them and really gain some of the benefits to be able to earn more and be seen as that go-to expert. Part of what we did with this one is we zoomed in and went with something really tactical with our very first one, which was how to earn more with cleanup projects. And then we did a zoom out, looking at the bigger picture of once you have those clients coming to you, how do you go ahead and actually increase the value of a client, as well as being able to have a very profitable accounting firm that is able to support your lifestyle instead of one that drains the life out of you. So that's the essence of what we're focusing on during this series.
Okay, so to get us kicked off into this, there's this magical formula of like, how do I earn more and work less, right? That's the sort of theme here. And I know that this is something that, and I don't say this word without some thought, an expert on pricing. So why don't we start by you just kind of going through your pricing system and then overing the group so they have a framework there, and then we'll work backwards from that point.
Thank you for that, Jonathan. And basically, this comes right from my Raise Your Rates formula. It's 5 different things to focus on. If you just take the essence of them, you will start to be able to increase the value of a client and not have to work as many hours. The very first thing is really understanding who your quality clients are, because there's a wide range of clients, the ones that give you headaches and the ones who are a dream to work with. And eventually you want to have more of those dream high quality clients who really appreciate what you do for them and they are not as price sensitive. So that's the first thing, is really having some clarity about who your high quality clients are. Number 2 is communicating your value, because understanding how to say something to attract those quality clients to you makes a difference. What you say affects who is going to be coming to you. And if you say the wrong things, you're going to have price sensitive clients coming to you instead of the clients that you really want to be working with. So understanding what appeals to those quality clients does make a difference. Number 3 is packaging your services. That's where you start to bundle different services together that offer a specific solution or fix a particular problem with your clients. And by doing that, you're starting to separate your fees from time. Number 4, which is what we're taking a deeper dive into today, is value pricing. How to be able to earn 2 to 3 times more when you're focusing on the value and helping the client see the value of what you have to offer instead of charging for your time. And then number 5 is what I call consultation mastery. This is how to enroll clients who really see the value of working with you. When you don't like the sales part, you don't want to pitch them. So those are the 5 steps of the Raise Your Rates formula, which is understanding who your quality clients are, communicating value, packaging your services, value pricing, and consultation mastery. It's something I do with all my clients. And the other part is I actually do this course, and the course actually begins on May 31st if you wanted to know how to be able to implement the Raise Your Rates formula into your practice so that you can earn 2 to 3 times more with your clients as well.
Is this formula built upon itself? What I mean is, is the formula iterative, that you can't jump to consultative mastery without having gone through steps 1, 2, 3, and 4, or are they independent? Meaning, do you see them as a sequence? I was kind of thinking about value pricing and consultation mastery. It's like, how do you ever be good at value pricing how do you ever be good at consultative mastery if you really don't understand your value and understand how to price it? So is there a staging stone to this in that process? And do you learn kind of some of how to get there in that session that you talked about?
Absolutely. In the program, there's handouts, there's resources. It's actually live group coaching calls so that I'm making sure that you can take the essence of it and actually implement it into your packaging and your pricing and get the results. I'm a results junkie, so I absolutely want you to be able to utilize this so that this becomes an investment as opposed to a cost. As far as what your question is, I believe that they are complementary, where understanding all these things allows you to really take your firm to that next level and differentiate yourself. But not everybody will start with understanding their quality clients. Some of them will just jump into packaging their services or how to enroll clients. So it's really, what is it that you need most? And I like starting there. So I want to serve people in the way that they need it instead of them adapt to what I think they should be doing.
Yeah, and I, not trying to be too boastful of your services, but packaging, I think sometimes it's hard to objectively work on your business and work on the business while you're running the business, right? And that's why taking this time out and having conversations like today or enrolling in a class like yours is so important. So I know this. Okay, so LeanLaw went through a whole price increase, and I understand the concept of resistance, right? And how emotional it is and how challenging it is to think about all of the nuances of raising prices. So I want to just kind of, now that we have the framework, go backward, or not backwards, but kind of start with, what's that resistance? Why does that happen? What is the sort of dynamic that forces this sort of mindset of resistance when people start to bring up the idea of price changing?
Sure. And I went ahead and put in the chat, how long have you been thinking about raising rates? Would love to know from everybody here if that's been on your mind and how long it's been on your mind for. But I will actually say
I can say from LeanLaw, we've been thinking about it. We just did a price increase, so we were just thinking about raising our rates. I mean, everyone has to deal with the subject. It's not just service providers. LeanLaw just raised their rates and had to go through that process. Sorry, I just butted in and answered our own.
No,
for LeanLaw.
It's all good. I will say for myself, it's not like I think about it today and tomorrow I make a price increase, even though I'm getting faster and faster at doing it. So it is something that is usually on our minds for a while. And then at some point we go ahead and actually do that. But there's a lot of reasons why there might be some internal resistance. You get worried about losing clients, or you feel that talking to your clients about that, there's going to be pushback and you don't want to have confrontational conversations with anybody, or feel like you're having to defend your services. You might not be able to communicate effectively why you're raising your rates, aside from the fact that your costs have gone up, or you want to just make more money, and not how to do that in a way that's beneficial to them, which is actually part of what I teach about in the course. And then the other thing is, you might believe that your clients are price sensitive. Even the legacy clients that have been with you from the get-go, your very first one, that they might leave you if you go ahead and raise your rates. So those are some of the things, is that it first starts with a mindset. We have to connect with our value before we can expect anybody else to recognize the value that we have to offer. And to also realize that people that have been with you for quite a while, if they love your services, they are probably not as price sensitive as you think they are. So the agonizing that you go through before you actually do that sometimes is much longer than what it is, or feels much more difficult than when you actually do that and you realize you're not getting the pushback that you think you're going to get.
Yeah, and I think the last thing you said was astute, is when clients value you, they tend to be less price sensitive. And those that are price sensitive probably see you more as a commodity, right? And we saw that in LeanLaw. We just raised our prices. And, I remember one client saying, well, we're not changing software. So we're offering a multi-year discount. And they said, well, we'll take the multi-year discount. So not only did they not churn, they said, well, we want to lock in 3 years because we value LeanLaw. And so, that's it's hard to watch people churn. But when you do it from a non-emotional mindset, you realize that's the best thing that can happen, because it opens up space to go out and get something new. And we're going to talk about that a little later.
Yeah, and Steve said in the comments, I think about it all the time and make sure they're always as high as I can and provide good value. Thank you so much for sharing that.
Yeah, and thank you for catching that, Loren, because if you noticed, it's hard to juggle managing the webinar and talking all at the same time. So accounting professionals and software people, we all work hard, right? So when you think about like how they increase revenue, what are the options, right? How do you increase it in revenue? And then there's the kind of a derivative piece of, which is profits. And we won't get into, revenue versus profits. We'll just talk about kind of profits and revenue. But like, what are the options here? What do you coach people here?
Well, I actually coach that it's important to increase profits, sometimes more than revenue, because you can increase revenue and actually have lower profits over the long run. But what I look at, and this applies to your business clients also, is that there's 3 primary ways to increase profits. One is that you can just work with more clients and focus on quantity. The second thing you can do is you can go ahead and be very, very lean and cut costs, so that you are not spending on things that maybe you're not using, where there's redundancy. I'm sure that you see places where your clients are wasting money and there's money leaks all the time. So that's a way to increase profits too. And then the third thing is to increase your prices. Now, with the getting more clients and cutting prices, both of those have increased costs with them, along with possibly increased profits too. Increasing your prices is the singular way to be able to have the most bang for your buck, to be able to really impact your profits without adding additional costs.
Yeah, and when you and I were getting ready for this, we had some anecdotal things around LeanLaw and lawyers, and I wanted to share a little bit about that. When LeanLaw started, and this is really important for those that service law firms, we had this interesting, terrible looking graphic, but it was very illustrative of the core problem that law firms have, which is this concept of an overhead yoke. And they really have two ways of earning more money, right? They can essentially win more clients, what you just described, or they can reduce overhead. And rate changing is certainly a third option, which is how do you create that more value? What I want the group to hear is that they're in a great position to help law firms understand their overhead. You said, we were talking just briefly about revenue versus profit. Lawyers run on cash flow. They just instinctively know their business. They know how many hours, they do the math in their head. They have this sort of nut of what they think their overhead is, and they do everything gut, which is terrible. It's amazing. I've had thousands of conversations, truthfully, with law firms, and I find them to be some of the worst business owners I've met because they can generate a lot of cash. So there's a huge opportunity for this community to come in and help them understand, well, what is profitability, what are rates, and what is profitability versus revenue, but just as importantly, what the cost is related to the work they're doing, so they're charging the right rate, both in the market and for themselves. There's just a real opportunity to add that value beyond just doing the books and say, here's a profitable area of business, here's a not profitable area of business, here's a profitable worker, here's a not profitable worker, and that all relates back into rates. So anyways, I just wanted to make that little note on that. Okay, Poll Central, another poll, time for a poll. Here we go. Let's see if I can find it. Here we go. How do you charge your clients? I'm going to keep this open for a few minutes. Okay, here we go. All right. In just a few more minutes, and I'm going to leave it open. Okay, the answer is combination. Everyone does a hybrid. So when we think about accounting professionals, how do they get through like this first step, like the considerations that they take when they think about their clients, right? Because we're talking, you kind of gave this formula to rates, and then you talked about the idea of how they can earn more and they can cut costs and this now. So now when you think about this whole context relative to their clients, what's your guidance there as they start to look at this through this lens of rates relative to their clients and client growth?
Mm-hmm. And what I did is I put in the chat is what are the qualities of some of your high value clients? Would love to be able to hear that from you. But what I see is, especially when you're first starting out, you're working with a wide range of clients and you're getting a feel for who you enjoy working with and who you don't enjoy working with. And from that, you realize that some clients are low value. Low value clients tend to be laggards with everything. They are late responding to your communications. They're late paying your invoices. They are late sometimes showing up for meetings with you. They might be treating you like an employee. They don't appreciate the service that you actually do for them. And or you get a communication from them. And as soon as you get a communication from them, your anxiety goes up. So that is what I see as some low value clients. And then you have at the other end of the spectrum, the high value clients. These are the ones who are quickly responding to communications. They quickly pay your invoices. They don't question what your invoices are. They value what you do. They implement the suggestions that you give to them. They come to meetings prepared with questions and really are open-minded about the suggestions you might be making or strategy to help them move forward. So that is the qualities that I see of high value clients for accounting professionals. But over time, you have some of these low value clients and you think about not working with them anymore because they are headaches. And that could be a lot of times your highest paying client is actually a low value client. So what I want to encourage you to do, and we do teach this in the Raise Your Rates formula too, is becoming aware of the difference between the low and high value clients and what you want to do to be intentional about having more high value clients in your firm, because that puts you squarely on the path to having your dream firm and really having lowered stress when working with your clients. Steve said that his clients that are high quality are easy to work with. They are your best cheerleader, glad to pay invoices, seeing the value you provide. They also give great referrals to people just like them. I will add that in. Julia said, happy to provide information, and they are responsive. So those are some of the things to think about. And as you're moving forward, you want to be working more with those high value clients because they're not price sensitive and they appreciate working with you and having you take care of their financials.
Yeah, and what's interesting is I'm going to make two comments here. One is I remember early on in LeanLaw, there was a small firm in Denver, and I were going through a sales process, and I was now going to have a meeting with the managing partner, and he was a very well-established lawyer, and I think they were litigators, and I remember going into the meeting, and I felt like I was being deposed. And I was like, immediately sort of put off, like, this guy's challenging me, and like, why is he being so pointed in his questions? And what I realized in that moment is that's how his brain worked. It had nothing to do with me. And I bring this to the group is sometimes when you're talking about high value clients and you get maybe with lawyers get a little put off by how they interact with you, understand that there are years of training in how they think, how they extract information, how they maneuver and negotiate, and that you have to kind of play to their personalities a little bit and not take it personally. I was in a meeting yesterday with some New York lawyers, tough litigators, and I thought the conversation, you stand up, and I had that conversation, and we're all great friends by the end of it. And I wasn't intimidated by those lawyers. So I just want to make that little note that when you're talking about high value, sometimes people get sheepish about lawyers because they can be they're wonderful people, they're very inquisitive, they're amazing clients, but in their first introduction, they can be a little standoffish. And they don't intentional, it's just how their brain works, is how they're going through their questioning. The other thing is about the ideal client. LeanLaw has been in business for 5 years, and we have continuously worked to align our product with that ideal client that gives us the greatest value. Now, there's a lot of it is economics, but there is some aspect of it is who do we enjoy working with? And lawyers are phenomenal to work with because they'll give you great feedback and they'll take your direction, all the things that were said. So Loren and I were talking about this, and I want to plug our next session because we're going to talk a lot about ideal clients. So I'm just going to quickly chat this to the group if I can find the chat tool.
And while you're doing that, I did put in the chat, how long have you held on to a headache client that you'd really like to fire? So if there was someone that you wanted to fire,
I have another note.
Did you hold on to them before you got rid of them?
Thank you for reminding that. So we had this law firm, you wanted me to bring this up, and I think it's really important. We had this law firm that was draining LeanLaw from a support standpoint. They were inept in their bookkeeping. So they kind of relied on us to, how do we do accounts payable? And we're like, hey, we do invoicing. We don't do that side of the business. And they were just draining our resources. And my success team brought it to my attention. And I called up the principal and said, hey, this is not working for us. And I said, here's how you can fix it. You should engage this. We can advise you and bring in an accounting professional to help you upgrade here, but it's not working. And eventually they turned. And two great things happened. One is my team felt seen, heard, and supported because I stood up for them as a leader of the company and said, this revenue is not worth the headache it's creating for you guys. And secondly, and we said this earlier, by getting rid of that client, it just opened up energy and space and resources to go service clients that really needed it, who were more in alignment with us. And I think it was a really important lesson learned that it's really okay to fire clients, and you can do so in a very hospitable and friendly way that it's just not awkward. It's just fact. And it worked out. Okay. We're talking about value, and it's a bit esoteric and difficult to describe. So especially I can imagine as it comes to pricing. So how do you calculate it? What's the metric you use to calculate value?
Well, I think that first I want to say that you have choices as to how you are bringing in revenues in your firm. You can either go for the quantity and work with more clients, which creates more of a transactional relationship with your clients because you need a lot of volume, similar to doing 1,000 tax returns during tax season, or think about the crunch that you get in during January when you're cranking out all those 1099s. So you can make it very, very transactional. Or you can go the opposite route and look at increasing the value of a client where you don't have as many clients, they are paying you higher fees, but now you get to really customize the service delivery, the client relationship, you know them by name, you know something about them. They are not just a transaction any longer. And those are really the two different ways that you can go with your firm, is to either go with quantity or go ahead and opt for quality. The other thing, if you want to start to calculate this, is to look at how much is a client worth over the course of 1 year. If you look at what they pay you over the course of 12 months, then you start to get an idea as to the value of a client. If you're happy with that number, that's great. If you want to go ahead and raise that number, there are ways to do that with your fees and the way that you offer them services. Or it could be that you want to do it, but you just don't know how, and you hold back, but you're realizing that your fees don't reflect your value. So I would say calculate the average value of a client over 12 months. That gives you an idea as to what the value of a client is. And if you're not happy with that number, then there are definitely ways to be able to go ahead and increase your fees and the value of a client so that you can increase your revenues without working additional hours.
Do you see, Loren, that some of your clients can have it both ways? And what I mean is have value-based trusted relationships with their clients, but have some transactional component so that they can, whether that's, you know, add-ons to the services or something that is a little bit more commoditized and say, you can get this from us. Do you ever see a synthesis? I know that you were talking about that, saying, hey, I've got a tax return process and it's all transactional. And I've got this sort of high touch, high consultative service, which is very value driven. Do you ever see a synthesis where there's components of maybe not transactional where there's value, but where there's a value relationship, but there is some transactional activity? Does one mitigate the other exclusively?
I think that it is usually, I look for a combination of both. It's going to be, some things are going to be transactional, but you want to be able to have a relationship with the individual as well, because you being able to have that relationship increases your value with them, which means that they're more likely to stick with you instead of moving on to someone else. By being able to understand the data around their financials and you helping them to do that, then they're being able to grow their business. And I believe that that becomes a win-win. So the way that I look at it is having different packages that bundle the transactional piece along with the relationship piece, and that the packages will have different amounts of consultation included in it. So it's a combination of both. And I believe that every time you talk to a client, it will increase the value because you're going to be talking about things and they're going to then want you to do more work for them. So yeah, I like the combination of both.
Yeah, I think I'm in alignment with that in the sense that I think it's important to start with value in binding the relationship and then look for opportunities to further monetize the relationship. And that might be transactional, right?
Well,
That's what I think about it.
Jonathan, and you mentioned this about attorneys, is the majority of clients that accounting professionals have don't really understand the financial side of their business to the degree that an accounting professional would, and they need you to be able to help them interpret the data and the numbers in order for them to make better business decisions. So they need you, and that you're able to help them understand the numbers better so that they are operating their business better.
Yeah, and okay, I got another poll.
That's a whole other conversation we could be having, right?
Okay, this is poll 3. How often do you raise your rates? Little typo in there. So quick poll out to the group to find that one out. leave it open for just another minute. Okay, so, wow, I'm impressed with the frequency. It's all over the map, but there's a certain percentage of the group, almost a third, said more than once per year, which is interesting that it's constantly on your mind. And then a third said annually, and then less than once per year. So some people are just not as focused on that topic as others are. Okay, so we've been, I want to get to my next question. So Loren, there's a mindset about pricing and buying decisions. Oh, nope, I'm on the wrong question. We have all these, Loren and I do all this prep work, and we set our stages to make sure that we're in alignment with where we're at. And so I got mixed up. So so when we're thinking about raising prices, right? Or raising the value of your client, I should say, what are the inherent benefits that you get, right? That if you can do that work to raise your value to the client, what do you get from it? What's the carrot for the accountant, for both the client and the accounting professional?
I'm going to go ahead and share the benefits, but I want to also say that this is how you want to communicate value to your clients as well, is focusing more on the benefits and the outcome as opposed to the task that you're doing. Want to just put that nugget out there. But some of the benefits for you of raising the value of a client is that you're having more of a relationship, and it's not as transactional with your clients. You're able to really focus more on what are the needs of your specific clients. The other thing is that you're focusing on the result. What is it that they want to achieve, and how can you help them to be able to achieve that result faster, better, maybe increase profits, less costly mistakes, but you're focusing on the results as opposed to just doing after the fact reporting. The third thing is that when you're really looking at having a higher quality relationship and working with higher quality clients, then you are able to charge more for your services. Those clients are not as price sensitive, because most clients actually are considering the quality of the relationship and whether you can deliver on what you've hired them to do over price. The only clients that are putting price as the number one criteria are the ones who tend to be price sensitive, and they want as much as possible from you without expecting to pay for those things. So I so far have that you're focusing on the relationship as opposed to transactional. You're being results focused. You're able to raise your rates. The fourth thing is that you're reducing churn. These clients are more loyal to you. They're going to stay with you longer. They are not just moving on as soon as someone else comes along that has lower rates than you do. And then the fifth one is that it actually revs up the lifetime value of a client. So over the course of years of working with you, the value of that client and what they will invest in your services skyrockets over time.
And this is, I think, what I personally see, what this is one of the most valuable things that you're talking about today, is the benefit of converting and being more value minded as you talk to them, because I mean, you're talking about the tangible things about relationships and lifetime value. It's also joy. When you have clients that value it, it's joyful to work for them. And when you have clients that don't value that are commodity, it's just miserable. So I think there's a human side to it too. I want to squeeze this in, Loren, because this was one of the questions or one of the comments that we did, but I'm just going to jump to the setup, which is, tell the story about this one client of yours that was uncertain how to communicate the value and what insights you got. Now we only have 19 minutes left, and we've got two more questions to get to. So I want to not spend too much time on it, but I didn't want to skip it.
Sure. Thank you. This has to do with Susan. And what happened with Susan is that she was going for quantity. She had a lot of clients. She was working a lot of hours, 7 days a week, 70 hours a week. She was burned out, and she knew that the way she was doing business wasn't sustainable. But she also didn't enjoy talking with potential new clients about her services or how much it was going to be to work with her. So she was very, very low on her rates because she just believed that she needed to enroll everybody that reached out to her. Part of what we did is we looked at who she wanted to work with and how to communicate her value. Then she had someone come to her that wanted her to do a cleanup for their books. And she said that before we started working together, she would have just calculated how much time it would have been by her hourly rate. She would have charged $1,500. But 100% of the time, Susan always underestimated how easy it was going to be to do the work. She always undercalculated it. So we talked about how to be able to have that conversation with this client about them seeing the value, her understanding the value from their perspective, the benefits of having accurate financials, and being able to make better decisions in their business moving forward. She followed the step-by-step raise your rates formula, including the questions to be asking during that conversation. They were able to see the value, and they went ahead and agreed to doing that cleanup for $7,900, not the $1,500. This wasn't any additional time spent working, but they agreed to pay $7,900 to have their books up to date and clean. And also because she was following the formula, they went ahead and paid her in full. That was a $6,400 profit that she made on that project, more than she would have otherwise if she didn't understand how to communicate the value and have them see the value from their perspective. But the other thing is, because of doing that, she realized that clients weren't as price sensitive as she thought that they were. And she went ahead and started implementing this with other clients as well. As a result, she went from working the 7 days a week, 70 hours a week, down to 3 days a week, 20 hours a week. And she increased her profit margin over the course of about 9 months by $56,000. So that is part of what this does, whether you have a small firm or a larger firm, of being able to raise your rates. You can charge 2 to 3 times more for the same work, and it increases your quality of life. You're working with a better client.
Yeah, so if I was making a feature film about your offering, that would be my trailer. So there's a mindset that you talked a lot about today around pricing and buying decisions, and the gist is that obviously folks want to earn more and work less. So how do you start? How do you start getting people to take that first step, separating their fees from their time and transition? And some of these people are already doing some value-based pricing, so they may have some sense of it. But I'm just curious, your take and how you coach that.
Sure. And I just want to say, Julia said that there's a difference in raising an established client, increasing rates for new clients. And I absolutely agree with you. And part of what we're going to be going into in a moment is some of the steps on how to do that with your current clients, because it feels more difficult. I also put a free resource in the chat. If you want to start to value price and package your services, be able to get my perspective on how to move in that direction, you can go to businesssuccesssolution.com/package, and that gives you the steps to start separating your fees and time. But what I would say is, if you're moving in that direction, you want to start moving away from an hourly rate or a fixed rate into value pricing. I teach what's called the good, better, best rates, and that is in the resource as well. With that, what you want to do is, you have a new client coming to you. Go ahead and calculate what you would typically charge them for that service, whether it's a monthly fee or a project. And then what I would say, take it and multiply it by 1.5. That's going to be your new good rate. Or for them, the new good rate that is 1.5 more than what you originally would have charged. I want you to enroll 3 people at the new good rates. And this starts to give you some insights that clients aren't quite as price sensitive as you think they are. After you enroll 3 people at that new good rate, then you're going to move up to tier 2, where you're now offering you better rate. Once again, people will be coming to you for services. Calculate what you would typically charge for that service. Now we're going to multiply it by 2x. This means that you're earning double what you normally would have earned for that without working any additional hours.
Hold on, are you multiplying the second better rate 2x by what you were originally charging,
what you originally would be charging?
Rate?
Yes. So what you're going to do is calculate what you originally would have been charging, which is typically time by your hourly rate. You come up with that fixed rate, and now we're multiplying by 2x. Thank you for the clarification, John.
I was just getting confused if I was taking the 1.5 times 2, or I was taking the base rate times 2.
Because I know what I'm talking about, right?
Right, exactly.
Makes sense in my head. Anyway, now you're going to be enrolling people into your new better rate, and you're getting more insights as to how to have an initial conversation and to help them see the value of working with you. You're working with better clients. After you enroll 3 people at the new better rates, we're going up to the 3rd tier, which is the best rates. Once again, people are coming to you, calculate what you would normally charge as a fixed fee for that service, and we're going to now multiply it by 3x. As a result of that, you are working with great clients. You don't need as many clients to reach your revenue goals. But I will let you know that offering that new best rate, that's 3 times what you normally would have charged, takes courage, not confidence. The confidence comes later. After all that, you've been at your new best rates, you might want to recalibrate, and the best rates become the new good rates. And once again, you go through that whole process of recalibrating and gradually bringing up your rates to where you want them to be. So that's the good, better, best rates. And it's a way to be able to increase what you're earning by 2 to 3 times more without working any additional hours.
You know, I love it, the way that you pitch that, in that it's almost like an A/B test. I mean, it's not an A/B test because you're not looking for better, but it's an iterative process so that you can essentially step up that rate and begin to understand, well, what feels comfortable. So you don't go from A to Z, you go from A to B to C. It's interesting by just saying, okay, 1.5, 2, 3. We, just kind of getting towards the end of our conversation today, I'm always wanting to leave the group with some really tangible action steps they can take. So, folks procrastinate this like crazy, right? We did at LeanLaw in the beginning before we got more methodical about raising our rates. So what are some steps people can take, and how do you coach clients so that they're ready to raise their rates with their current clients, right? It's one thing to come in to a new client that's never discovered you, but the first step is you've got this body of work and you don't want them to be a caboose. And we had this at LeanLaw. We just did this. We had what we call pioneer clients that we hadn't raised the rates, thinking, oh, they were our first clients and we should never raise the rates. And the truth was, we were, the delta, what we were charging for those clients and what we were new clients was so steep that it just made no sense to keep that population. So we raised the rates, and it was emotional. And some people are like, whoa, wait a second, and you just work those. But anyways, I don't want to talk about, I just want to say that every company has to deal with raising rates with legacy clients. So what are some of the action steps and some of the coaching that you give to your constituents?
Well, first, I want to just give you a statistic that I found in my research and preparation for this, is that if you go ahead and raise your rates, most likely 82% of your clients will go ahead and continue working with you. And calculate how much more would you be earning, but you might not be working with as many clients. And I have seen up to 100% of clients continue working with you when you do a price increase also. But on average, the statistics are 82%. The ones that leave are the ones that are the headache clients, the Peter clients, the ones that are price sensitive. That lets you know something to just put around your head as a metric. But I actually want to talk about Rihanna, because Rihanna was building up her firm, and she was working with everybody. She was saying yes to anybody that wanted to pay her fees and were willing to. As a result, it wasn't very efficient for her operating her firm, and she found herself working a lot of hours. She would put the kids to bed, go back and do some more client work. She would miss out on their sporting events because she had to do some catch-up work also. People would text her at 8 o'clock at night and on a Friday, and she would immediately answer them. She had very little boundaries in her firm, and it was taking over her life. It wasn't really, it wasn't sustainable once again. So we talked about how to be able to increase the value of her current clients. What we did is we identified who her best clients were and who she wanted to be working more with, and the quality clients that she wanted to bring in as well as she currently had. The very first thing that she did, the first step, was to be able to send them a letter. She chose to email them a letter instead of putting it in the mail. She sent them an email letting them know that she was making a change in her business model in order to improve the client relationship. So it was a benefit-driven letter that she gave them that I was able to give her, and then she just modified it so that it fit her firm's needs. And then in the letter was that she would be reaching out to them to have a conversation. She chose to have it over Zoom as opposed to an in-person conversation. So the very first step was communicated in a letter that you're making some changes to your business model. The second step is scheduling that conversation. Step number 3 is where you're having a conversation with them, having what I call a value conversation, where you're understanding what's important to them as far as their current needs, things that they want to go ahead and implement, and then some of their future focused goals that you might be able to help them achieve. She was understanding what was of value and important to them. That was the value conversation. Number 4 is that she was now able to offer 3 options, as we talked about before, 3 packages of how to be able to move forward and work together. She had a silver, a gold, and a diamond package, and they were now able to choose how to move forward with her and which would be a best fit for them. And then the next step was she knew that some people would question why she was raising the rates or this change in her business model. We went ahead and figured out what the top objections would be, created some sound bites. She practiced them out loud so that when they came up, they wouldn't throw her off and she would shut down the conversation because she got anxiety and was stressed out. And then number 5 was how to discuss the payment of moving forward, because part of what she did by following the raise your rates formula went from invoicing clients to where she was being paid after the fact to a prepayment model to where she was being paid before she did that month's services. So those were the steps that we went through that you can implement as well with the raise your rates formula, is communicating it in an email, going ahead and scheduling that conversation with them, having the value conversation where you're understanding what their needs are and how you can help them achieve those things, offering 3 options as to how to move forward with you by offering packages, understanding that there might be some objections because they don't see why you're all of a sudden changing things, since people don't like change, and how to respond to that. And then discussing the payment, especially if you want to go from invoicing into being prepaid for your services.
Hey, do you mind if I post that?
Please go ahead and post those steps right there in the chat.
Okay. Those are directly from Loren in our worksheet. And I think what's so interesting about what you said was the objections piece, because it's such an emotional conversation, because you think every time you raise rates, it's so charged and you have those first conversations and you think it's going to be awful, right? And as I said, that mention with, that big client that said, oh, we're staying, we'll just get 3 years. So we just booked 3 years of revenue from a very large client. And, we, as I keep talking about LeanLaw, just raised our rates. And one of the costs or consequences, what we call our micros, our very small clients, we had a fair amount of churn, more churn than we ever get. People left. And, that was a very difficult thing to see. I get a little notice when people come through to see it go. But again, it was all about those people saw us as a commodity. They might have churned a month from now. They might have churned, they weren't steadfast on our platform. And we as a company couldn't be profitable, and our business couldn't sustain itself supporting and focusing on these small clients. They weren't the right fit for LeanLaw and what we wanted to do as a company, what our vision was. And so there was this challenge for us to say, it's okay to see them go. Our churn numbers are going to look bad for a month, but they'll settle off, and we'll start getting that nice alignment between the clients that we want to have in our ecosystem and who we want to work with. Okay, last poll, here it comes. It might not be the last poll, there might be one more. Anyways, this is us asking before we wrap up if there's interest in talking to Loren about your rates. So she has a quick little 15-minute consult or something you might want to learn more about. And she's put a link in there, I think, as well. So cool. So there's some positive things. We're going to let this be open for another few seconds, and I'll talk about my last last question. Okay, and I'm going to end that poll. Thank you for answering that. So Loren, we always end it with this question. Anyone who's been with us before, you shared a lot with us, and this was a great conversation and something, you know, is near and dear to my heart because we've been doing this in my company. Everyone has to deal with rates. So you shared a lot, and you know, I know there's probably some interest in people seeking some more information to, you know, increase their income without having to work as much, so they can lighten their load. What's next for these folks? What do you suggest?
And thank you for letting me just share. If anybody felt that they got value from our short time together, they are ready to get this done, raise their rates, working with the higher value clients, separating their fees from time, then I suggest we have a dedicated conversation that really focuses on you, your business, and what you want to achieve. It is called a Path to Profit Strategy session, where I'm really finding about where you're at and what's possible for you. It does have a $500 value, but it is complimentary because I want to make sure that it's a conversation that serves you to the highest good. So if you are ready to raise your rates, you want to be able to get this done quickly as possible because you know that your fees don't currently reflect the value that you offer your clients. It's been on your mind for a while. Then let's talk. Go to businesssuccesssolution.com/let's talk, and we can get that conversation set up. Just once again, it's at businesssuccesssolution.com/let's talk, and the link is in the chat.
Yeah, and I've said this earlier, I'll say it again. I've seen firsthand the success of accounting professionals working with you. LeanLaw works very closely with accounting professionals, so we develop tight relationships, and it's really fun to see that connection and see those practices as accounting professionals really blossom into almost a whole different career. I'm thinking of one in Texas, and her whole business is completely different. And she was on one of these webinars, and she took the Let's Talk, and 6 months later, her business is radically different. And I remember her coming to me, and I said to her, "Hey, you should talk to Loren," because I was like, she was about ready to spend a ton of money on marketing, on some marketing engine. I'm like, whoa, hold your horses. Maybe talk to Loren first and do that. Anyways, last question here. I'm going to launch the poll. If those of you could just rate it, really simple rating, positive, negative, neutral. Loren, as always, thank you so much for this collaboration and the conversation. I remind the group that we will continue this conversation on Thursday, July 14th at 11 a.m. Pacific, 12 Mountain. And it will be 5 steps to win new clients, even when you don't enjoy the sales part. Have a great day, Loren. Thank you all for answering that poll. We appreciate it. And you will get some emails with a video recap, and have a lovely rest of your day. Everyone enjoy May and Cinco de Mayo. Thanks, Loren. Nice talking to you.